ahead and record that now. So for those who are not able to see my screen, I'll send out the link so that you can go back and watch this later, and you can follow along. First, I just want to start quickly with who ArchMI is. For those of you who are not aware, Arch purchased United Guaranty about 3 years ago. So we're the largest mortgage insurance servicer in the country right now. So if you weren't aware of that little tidbit, that might help you out just a bit as to who we are if you're not currently using us. I'm going to show you how to obtain a rate outside of your system. And the reason I'm doing this is to highlight a couple of products and things that ArchMI is doing that you may not currently be aware of. With that being said, we go ahead and go to archmi.com. In order to obtain a rate with us, no username or password is necessary. You can simply enter in your NMLS number and make sure that it is you. We're using Kevin today as an example, and Kevin is no longer with directors, as we all know. So we're going to add a new master policy. I know.
You haven't updated that, Tammy? Come on.
Well, clearly you haven't ran a quote with us.
Touche. That was below the belt.
That's all right. We're going to show everybody. I mean, this is probably the case for many people on the phone today. So we're going to go ahead and add your new master policy. I'll follow up this call with this number so that you all know what it is you're using. This will guarantee that you're getting the most accurate pricing. We're going to go ahead and call this a test. We will use your newest market of Bend. Oh, no, we're not, 977. I think that's a good, yeah, I think that's like Prineville or something. We're going to assume that this is a detached property with a base loan amount of $300,000 on a 90% LTV. I'm going to go ahead and call this a rate and term refi just for a couple reasons. One, I know your pipelines are getting full with that, and also to highlight a product that we are doing right now. Fixed, 30-year, approve eligible, retail channel. Understand that you can change any of these if you need to. 2 borrower loans always price better than 1. Remember, this is risk-based pricing. So be sure you're entering in both FICO scores for both borrowers. Even if they're both not currently employed, they have the ability to be potential wage earners. So we encourage you to enter all borrowers. And be sure to indicate if there's a self-employed individual. And then housing expense ratio without mortgage insurance. Be sure and enter in both the front and the back end, excluding the mortgage insurance premium. This definitely goes into effect when you have loans that are just on the cusp of maybe going over 45% DTI. Exclude the MI, bring it below 45, and get a better pricing. I encourage everybody to exclude it all the time just to make sure you're getting the most accurate pricing. And then you're going to go ahead and get your rate. So here's the rate for this particular borrower, $95, 38 basis points. And the reason why I indicated the refinance is because I wanted to highlight a program that we're doing right now, and it's the refinance retention. Any loan that ArchMI is currently servicing that needed mortgage insurance, so say that maybe they did a 95% LTV. They want to take advantage of today's rates, but they're still only at an 85% LTV, so they still need mortgage insurance. If they had ArchMI before and they need ArchMI again, we can have you all mute your phones, that'd be great. If they still need mortgage insurance, we're offering an additional discounted premium. Any questions on that? So if they had ArchMI before and they need mortgage insurance and you bring them back to ArchMI, discounted premium. How do you know? One, your system will, goes off a social security number, your system through your LOS will automatically look for that unless the loan is being serviced by Wells Fargo. You'll know that by looking at a copy of the credit report. If the loan is being serviced by Wells, that information cannot be transferred through your LOS and through our system. As you all know, Wells Fargo got in a little bit of trouble a while ago with transferring information. So they don't allow that to be transferred. So then you would jump online and obtain a quote. Here you can either enter the certificate number if it's a loan that you originated before. If it's not, you can put in some loan information, or you can simply reach out to me and say, hey, Tammy, is this something that Arch, or remember, Legacy United Guaranty is servicing. We own 25% of all mortgage insurance currently being serviced in the nation. So chances are 1 in 4 that ArchMI has the original mortgage insurance, and it does not have to be a loan that you originated. So just double check with us. It's a way to save a little bit of extra money. Any questions on the refi retention? All right. And the other thing I wanted to highlight was buy down. So Arch-MI is the only, along with the refinance retention, the only company offering this tool as well, which is the Arch-MI buy down. So this is a really cool tool. This allows you to buy down your monthly mortgage insurance premium with any amount of borrower, seller, or lender paid contributions, or any combination of. So in a purchase market, if you happen to have any extra seller contributions and you've maxed out a year's worth of HOAs and you're not sure where to put that extra money, you can buy down your monthly MI. You can enter in an amount. Say you had $1,000. You can recalculate that. So you go from $95
Somebody
to
keeps freaking ringing my doorbell.
I know. I need to turn that off. I don't know how to turn the doorbell ding off. Sorry about that. So this is a way to really get competitive. If you're competing with somebody else on a price, or you have a client that has a very specific dollar figure in mind, what their PITI needs to be, you can obtain that or achieve that goal by using this. Maybe you're trying to get to a 45% DTI for an AUS approval. How do you get there? By using buy down. You can also slide the bar and see how, up and down to see how it affects your monthly mortgage insurance. You found an amount, you say apply buy down, it applies it, and you can view your PDF. Note this is everything that goes into making your rate with Arch-MI. And real briefly, I just wanted to go over a couple of the mortgage insurance products, and this will help transition us into the next piece, and that is borrower paid monthly MI. As you know, it's attached to your monthly mortgage insurance premium. We have single premium, and there's two ways you can use a single premium mortgage insurance. There is paid at closing, single premium borrower paid MI. So it's a one-time fee paid at closing, and it just buys it out. Or you have single premium financed. You can finance that single premium in. And the other one is lender paid mortgage insurance, which you're probably all familiar with, but that is an increase to your interest rate, and the MI is paid out on the back end. So you do not see any MI at closing, whether that's in your monthly premium or paid at closing. It's truly built into the rate and paid out on the back end. So those are kind of, keep those ideas or those different MI options in mind as we move forward. As most of you know, Dave Savage with Mortgage Coach is on the line today, and we're going to go through a couple of scenarios on the different MI premiums and how they can help you just really, again, have a higher conversion rate and the sales advantages that go along with that. So Dave, are you on the line?
I am. What's up, guys? Can you see me?
I don't see you, but maybe you're just down on my list here.
Let's see. Does anybody see me? Just confirm that it's working. Looks like it's working.
There you are, Dave. I see you.
All right.
So for those who are telecommuting or e-commuting, which I think we're going to see a lot of, as you know, I saw the state of emergency come out of King County this morning, encouraging everyone to stay home. So hopefully everybody gets familiar with Ring, because I think we're going to be doing a lot more of these.
Yeah, no doubt. Well, let's make this as interactive as you guys want to make it. Tammy, do you want me just to share my desktop and go, or is there anything else you want to share?
Go ahead. No,
okay,
I think there's.
Let's see if I can take
as you're
it from
preparing
you.
that.
Oh,
Yeah, as
looks
you're
like I
preparing
got it.
that desktop. Great. I wanted to just say that there are some advantages, like we said, in closing more loans with mortgage insurance. And I understand, depending on each client's different scenario, that could be a different conversation. But through Mortgage Coach, we have found some ways where doing, I think are you gonna start with the 85? We're doing an 85 LTV loan.
Oh, go
ahead, Dave.
Okay.
I would say doing an 85 can be better than an 80 when the client comes in and says, I don't want mortgage insurance. While they may say that up front, there are some ways that can help give them a better scenario long term. So go ahead, Dave.
All right, guys. So I'm going to take the approach of just what are top producer loan officers doing. And let's just like put MI over here. It's a tool that most loan officers know how to use it when the family doesn't have enough money to put a down payment. And MI is the only option. like, oh, here's MI. Most loan officers don't realize that, hey, even sometimes if the family does have enough for 20%, that is still a tool. And one thing I want to start with, and I want to remind folks, if you have questions, put them in comments down below or in chat, and Tammy and I will get to those. But I'm going to focus on, like, forget about MI. How can loan officers get better conversion? How can loan officers reduce rate shopping? And let's say you have a rate shopper, which everybody is. It's a question of whether they grind you or not. Everybody, knows what rates are at because it's on Zillow, it's on apps. And once they're starting to look for a mortgage, it's in their Facebook feed. So they know what rates are. It's just to help you go from price and competing on rate to advice. And so a couple things, we did a call on What's Your Rate. I'm sure some of you guys have watched that, but I wanna just, like, what are loan officers doing and how are they using MI to have a competitive advantage? So, these are some interviews that I've done with top producers, many of which close over $100 million a year in volume. And it's just like how to go from rate to solution. And so the biggest and most important thing, especially since you guys are with Churchill, is to realize that you guys are providing financial advice. Like, it's not uncommon for a Churchill loan officer to get into the Dave Ramsey, 7 baby steps. And one of those is like, hey, make sure you have enough money. You have 3 to 6 months in savings. So I'm going to start with an MI example from one of your own, Kevin Watson. And Kevin, I had sent you an email, so you have a link to this. And Tammy or I will put a link to this in chat, so there'll be a link down below. And what makes this cool is that Kevin takes it from a sales strategy perspective. So this was a client that had 20% down, but he was able to show them that, you know what, maybe that's not the best option. Maybe you should save some money, keep it liquid, and let's go through that situation. And he did a 3-minute video, guys, for Churchill. I told him I was getting on this call with you. So this is Kevin Watson providing some sales leadership around MI options using the Mortgage Coach TCA. So Tammy, do you want to kind of speak to the nuances to this, or do you want me to?
Sure, I can go ahead. So looking across here, we've got a 30-year conventional, how did he do this? So no MI is all the way off to the far right. So just straight up 20% down. In the center is 10% down, single premium financed. So we talked about that option. And then the very first column is regularly monthly MI, which so many of you are probably familiar with. So I took that single premium and financed it in the middle column. And then obviously over to the right is absolutely no mortgage insurance. Purchase price of $450,000. And your MI
I'm just moving it around so they can kind of see the details of it.
I appreciate that.
And
So
guys, you're going to
LTV,
get a link to this so you can kind of follow along with it.
Absolutely.
Here's the, kind of the details for the consumer.
And
all right, go ahead, Tammy. Sorry
obviously
about
the LTV, no, it's okay. No, that's fine. The LTV changed just a little bit as you scroll down there, obviously, because you've got a single, the middle one, you financed that MI in, all assuming we're right around that 3% rate. And let's see.
And you can
the
see the
conventional 20% down obviously is going to be a little bit of a higher rate versus once you have mortgage insurance, and those obviously receive a little bit of a better rate, giving you more rebate pricing. So you can either buy out that monthly mortgage insurance, or you can take that MI and finance it in, which they've done in this center column here. So moving down, what that payment looks like.
graphically. And again, if you're dealing with a consumer that MI is an option, just by the fact that you're giving them MI options, you're winning, you're gaining trust, you're providing education, and something that can be simple, or excuse me, complex for a family, you're making it more simple so they can make an educated decision which strategy to go with. You're becoming a mortgage strategist, and you're showing the cost over different periods of time. So like every loan officer is gonna, be able to speak to this generically with fee worksheets. Not every loan officer is gonna be able to put it graphically. Not every loan officer is going to be able to show the cost over time. So it might, and in some cases, this may not have been 60 months. It might have been like 36 months or 24 months, depending on what were the goals of the client. And then, of course, you could show it over a longer period of time. And then, of course, all in one place, you know, you could deliver the advice, the options, and you can show them your most recent 5-star review. In this particular case, it's, you know, it's Kevin's because I'm showing his TCA. So, Tim, anything you want to call out on that or anything you want to focus in on?
Well, yeah, ultimately, I wanted to highlight the cash to close line. Obviously, on a 30-year conventional 20% down, this particular scenario is coming in with over $100,000 to be able to say, I don't want mortgage insurance because they don't want the MI. When in actuality, with just half as much down, gives them nearly the same exact, you know, just with just a few $100 difference in payment and, you know, monthly payment, and gives them that extra $50,000 to invest elsewhere to give them that financial freedom. Maybe the home needs some repairs. Maybe they want to, you know, get a new couch or two or something. So the difference in their overall, you know, wealth to be able to not have quote unquote mortgage insurance, you can see the numbers really, you know, highlight where MI can be a cost savings at the end of the day.
Yeah, and then one thing Kevin didn't do here, but he could have said, hey, let's say they want to do the financed MI, that's the one that they like. He could have said, well, what's the difference in money here? And he could have used our reinvestment strategy. And he could have said, well, you know, where are you keeping that, you know, 40,000 or 50,000? And what is the rate of return on that? And then it could have shown, you know, the rate of return over different windows. Or he could have said, hey, what if, you know, 5 years from now, you wanted to take that amount and apply it to the principal? What would that do? So, you know, at the end of the day, you guys are able to take pretty much every client that's considering MI options, regardless of whether they need to or not, and actually help them make a, you know, an informed decision. Another scenario I sent to you, Kevin, and we'll put a link down below and we'll get it to you, is a TCA from Keith Collins, who's I think he did $70 million last year, top producer and a leader. And this is a video he did for his region, which he told me I could share with the mortgage coach community. And he was basically telling everybody that, hey guys, this is a huge competitive advantage. And he called out, I don't know if it's true, I assume it's true because he said it.
I verified, Dave. I'll tell you how this works.
Go ahead.
So one of the things that Keith mentions in here is we can finance the single premium, which he's done in this scenario, the third column over, financed MI. And he makes the comment that brokers can't do that. So obviously there's a lot of individuals that have headed to the broker community lately and think they have got a great rate advantage. And while that may be true, the one thing they cannot do is finance mortgage insurance. And the reason being is they're capped at 3%, and that includes their fees, their commission, everything has to be within that 3%. And that would include financed MI, unless they were only charging 1 point and the other 2 came from the financed MI piece. Maybe that could work, but in most scenarios, it does not. So financing MI and making, rolling it into the loan amount for your clients and creating the scenario that we're talking about is not necessarily eligible for the broker community.
Yeah, so I think, he makes that point like, hey, this is good leadership when we're helping clients make decisions, providing them options. And when we're in a highly competitive situation, I mean, it's turning mortgage advice, it's weaponizing mortgage advice, especially if you're competing against a broker. So this is something that we want to share with you, some ideas on how you can use MI as a competitive advantage, and listen to the whole video so you can kind of hear from him some sales leadership from a top producer. He is a black belt in mortgage advice, and we thought that this might be helpful for you guys. So a couple other scenarios that we have, Kimberly Miller, from Arch MI had created some scenarios, and she did this for the Nashville game. And so we wanted to give you some of these ideas. This one's kind of more of the same. It's another example of where they're showing a 20% down versus 15% down single premium, 30% or 15% down finance single premium, and then of course monthly MI. So again, another example of showing different options. Check that out. But I want to get your creative juices flowing. Here's one where she said, hey, let's do a rent versus different strategies. Another one where she said, hey, let's do home ready versus Fannie 97 versus FHA. So really my push to you, and I'm gonna see how in detail Tammy wants to go on these, but it's for you to be experimenting with mortgage advice, with options, and all getting smarter together. So like at Mortgage Coach, we've got this brown belt, or excuse me, being a black belt in mortgage advice. And in order to do that, you have to do 300 TCAs and know how to do it within all of the sales situations you get in. But here's the deal, guys. To be a brown belt, you need to do 100 total cost analysis. So 100 times you're given a family value, but you need to be a leader. And you don't need to know how to turn this into a marketing advantage. So I would just push everybody over there. One, be a leader, like figure this out yourself and then share it with others in your region. And then also, how do you turn like the superpower that we're showing, just visualizing and providing education around MI options, how do you turn that into a marketing opportunity? How do you, promote that on social media? And just recommend that you guys mastermind together and keep that conversation going. So any questions come in, Tammy, or anything you want to go through on these other examples?
No, I just wanted to, actually, Dave, can you pull up one of those from Kim, that first one? Kim Miller is the account manager for ArchMI that covers your corporate office in Tennessee. So if you're not familiar with who Kim is, I am still your account manager. I'm the one you want to talk to, but I know she'd already done this, so I didn't want to recreate the wheel and use some of her examples. One of the other ways that I think I briefly mentioned on the 20% down versus the 15% down was obviously the rates on those two are a little bit different, and you can take that rebate pricing and buy out the monthly mortgage insurance. So again, just another way, I said it earlier, but I don't know if you caught it. You can finance it in, you can pay it at closing, you can, as long as it's taken care of, obviously we're okay with that. So any questions on mortgage insurance? I know it's a riveting topic for so many.
Well, I mean, it really is, though. I mean, this is something that there's just a lot of things that you could do. I did an interview with Josh Metal, another top producer, and he was talking about how he had this first-time home buyer that had this huge FICO score, had enough for 20% down, was rate shopping him literally with 7 other lenders. A lot of loan officers would have just said, I'm out, like, no thank you, good luck out there. But he said, you know what, I had a 20-minute conversation with her, and I pulled out a TCA and I showed her MI options, and he won the deal. And he didn't have the lowest rate, he had the best advice. And so MI is just a great opportunity to go from price to advice. Like, someone's getting MI, you have an ability to show up in a way that most loan officers can't show up, if you're smart about this.
Yeah, just being educated. Kevin. And if you didn't catch everything, know that Dave and I are available to answer scenario calls or questions. Like, can you dig deeper on this? Can we get down to the nitty gritty? But any initial questions for either of us?
And just a reminder, we do training every Wednesday. We do mortgage strategies, and every Thursday we do Q&A. So if you need help on how to do this in Mortgage Coach, we have videos on how to do MI analysis in our YouTube channel, and we train every Wednesday and Thursday just how to do this kind of stuff. Kevin,
so everybody knows those. No, so everybody knows that, Dave and Tammy. Where is that on your YouTube channel? Is that where they can go on those days?
Yeah, so a couple of places. One, you can see what training we have on our in the advice engine. So if you're logged in to the Mortgage Coach advice engine, you'll see where that is. But in our website, we've got this mortgage strategy page, which I'm on right now. And then 2, we've got a calendar. So if you go to our calendar on our website, All of our training is available there. And then if you go to the Mortgage Coach YouTube channel, we have a playlist called How To's. I think it's towards the bottom. So it's right here. And I think there's over 80 videos. You could also just put in search, you know, and just, I think if I just typed in MI, I'll probably get an MI option. You know, how Kelly Zitla turns MI borrower education into a competitive advantage. How to show split MI, you know, how to add MI to an FHA loan. So those would be a couple of resources for you guys.
Awesome. No, that helps.
I'm going to touch on the split MI piece just real quick, just because you mentioned
Back
it.
to you.
So Arch Mortgage, yeah, Arch MI does not have split MI. So if you're wondering, if you're on there going, okay, I watched the split MI video, now Tammy, how do I obtain it? Arch doesn't have split mortgage insurance. That is where we replaced split MI with the buy down option, which I showed you earlier. So you can buy down the month, and that way you can customize it and really create any rate you want. So just to make sure that that differentiator is there. I want to recap. So we learned how to get a rate quote, learned about buy down, the refinance retention program, and how to structure more deals with mortgage insurance. And I think that works pretty well up into that 90%. I know we showed 80 and 85 LTVs, but I think you can find those same advantages all the way up into the 90% LTV range as well. Dave and I will put together a recap so you can find some of these links for the videos that we provided today, along with some additional information. I'll get your master policy number to you. So if you're quoting files outside of your system and may not have all of the information just yet, but you need an MI quote, I'll get you that master policy number so you can all update. And what else? Am I missing anything?
Kevin, anything else you want us to cover?
No, is there anything, I mean, this is your time, group. Does anybody have anything for these industry experts on this? I know the big thing we've done, team, is really make this a part of our flow, Dave, and everyone, is to really incorporate this, you know, the price versus advice, and really becoming the expert and the educator around this. So we've incorporated this, and even our team, even in the Northwest Lending team, has started to share a weekly success story as it pertains to mortgage coach successes about doing that. So, but no, this is the time, group. If you guys have any other questions, I appreciate you guys even taking the time to do this.
Of course. I mean, like I said,
Come on, guys, give us some questions.
Yeah, I was like, being the expert's going to be gaining all the knowledge, and I like to geek out on MI. I've been doing this a long time, so hit us with some questions.
And then also, if you have done a total cost analysis with MI options, I would love to just, you know, have you put a comment in what your most common mortgage strategy is. You can put that in comments right here. Just say, you don't need to put your name in. We can see who your name is. Just let us know what you're doing. You know, are you doing the 15 versus 20%? Are you doing, you know, monthly versus finance? You know, what are you guys doing a lot of right now? Please type that into comments. One, so we know you're alive, and two, whether we know if you're playing the game.
I know it's so easy to just go BPMI and then just simply start shopping rate. You're not alone. All my clients do it. But I think there's definitely, like I said, some strategy behind closing deals with MI.
I know, to call a couple people out, I know James Atwood out of our Tri-Cities office uses it a lot. James, what do you, what's working for you?
And James, I've unmuted you. Well, I tried to unmute you. Tammy, you're going to have to do that.
Oh,
you've been unmuted, James. James.
Did he take it off?
He's not muted.
How about, oh, hey, that's not James.
He's on a phone call right now.
Oh, he's killing it. What did look like Julie Swenson said something. So Julie's just trying to learn about it.
Julie, unmute Julie. Yep. And just let us know,
yep.
guys. You can let us know in chat and we'll unmute you.
Yep, I just heard from Kara and Julie. Julie's still working on it, and she wants to incorporate it into her business. Kara's saying she's been doing a lot of single premiums and monthly MI. If I can't do single. Good, good, good.
Can you guys hear me?
We can.
Yes.
Okay. Yeah, I know myself personally, I mean, I've probably done, 20 to 30 refis, or excuse me, mortgage coach scenarios in the last couple of days. I know that we like to be creative with the MI as well, whether it's 10% or 15% with the LTV and buying out that MI up front and saving that client money. So I know what we're doing specifically for our team in general is on those refis, we're trying to make it as simple as we can for our client by saying, just send us your mortgage statement. And then that way we can put together the loan scenarios and advise them and be true advisors for them on maybe it's an extra principal payment. Maybe it's switching it from a 30 to a 15 years. So we've incorporated that a lot on our team here in Lake Oswego. And something that we do before we even get an application at this point, just trying to get the client excited, show them the TCA, and then after that they can move forward.
Love that.
That's a really good
job.
point. The 30 to a 15, and know that the mortgage insurance premium drops drastically from a 30 to a 15 as well. So if you change that amortization period, know that you'll have even more favorable mortgage insurance should you still need it on the 15.
What else, gang? I know one thing we've tried to incorporate too, just in any scenario, is adding that additional principal payment and really showing them where that new freedom point is, that we've made that a part of our business in every single transaction or in every single mortgage coach, to make it the last option outside of the representation, to really show them. We had one this morning that brought the freedom point down to 16 years from a 30-year fixed mortgage. So just understanding what that looks like and representing that, and like you said, be the educator around it. So.
Yeah, so I'm going to share a couple more slides and then I'm going to jump out unless people have questions. But part of how to get outside of the mortgage, these are Dave Ramsey's baby steps. And I interview all kinds of loan officers. Like in my recent interview with Jeremy Forcier, he talked, this is what they use at the core. And he talked about things that go beyond just mortgage advice. But here's the 5 things that I think every mortgage coach needs to do in order to get into just call it that advisor conversation. Is first of all, you need to talk about saving, making sure the family is saving has 3 to month savings in emergencies. And sometimes when you're interviewing that client, they may have 20% down, but putting that 20% down compromises this. And especially if the family is buying a new home and you've uncovered that, hey, you need to have, or at least it's recommended, you're financially healthy if you've got 3 to 6 months in expenses for emergencies. Always educate families to analyze the cost of the debt over time. No matter if it's your mortgage debt, your consumer debt. Too many Americans, they just look at what's the cost monthly. Like, I can get $5,000 and it costs me this per month. I can get $200,000 and it costs me this per month. You need to look at the cost over the life of the debt. That's what Mortgage Coach helps you do. You also need to always be helping families understand you want to pay off all your consumer debt. So if there's a first-time home buyer that's got a car loan, they've got $5,000 to $6,000 in credit card debt, and that 20% down is not only leaving this consumer debt in place, but it's also compromising this. Again, that helps make the case for MI. Also, it's important that you're always advising your clients, make sure they're maxing out their retirements. And then, of course, make sure they're analyzing strategies to reduce their cost of debt, like prepaying your mortgage, which Dave Ramsey loves. But for families that, maybe they have a financial planner, they want to invest more money, maybe it's, get the loan with MI and invest the difference with your financial planner. So these are the 5 essential considerations to making a smart mortgage decision for a mortgage coach black belt. And again, you guys are with Churchill, so you're very familiar with the Dave Ramsey baby steps, but this helps you show up better for a family, so that not only are they getting better tangible service and value, but you're also creating a competitive advantage. Like, you're not interest rate salespeople. You are pick a smart mortgage strategy so you can build wealth with real estate expert. And so those are just a couple other thoughts to consider for everyone. Tammy, I'll let you close it out with the crew, and I've got to jump unless someone has a quick question for me.
Yeah, thanks, Dave. Just in
Take care,
closing,
y'all.
I wanted to say thanks, Dave. I just wanted to say I'm not having this conversation with all of my clients. my client, not all of my clients are interested in having this conversation. They're just like, oh, I want the monthly MI and I'm going to shop it all around. And so it's so refreshing to be with a group who truly wants to, you know, be educated and provide better advice for their clients. So thank you for giving me the time. Hopefully I'll see the majority of you next weekend in Bend. Arch and I is sponsoring your event. So hopefully I'll see a lot of you live and not just on the webcam. But again, we'll follow up with all the links and information we discussed today. And I encourage you to send any questions or scenarios, anything you may have my way. And I'll get out of this hotel room in Medford here. Sunny Medford is where we're coming to you live from today. So I don't know. This is not my decor. If you're looking at it live, this is not my home. Anything else for me? No, we're good. All right. Well, thanks again.
Thanks for taking the time,
everyone.
Tammy.
And
Appreciate it.
of course, and be on the lookout for that email. Have a great day.
Thank you. See you guys.
Bye.